Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract. Front month in nature, and looking at the last print on Friday, we're at 1136.25. A beautiful uptrend day we had today. Of course, the fifth day of March, and as you can see, it's been a very choppy week. Over the last few days. So we have Friday, Thursday, very choppy. Wednesday, very choppy. Tuesday, very choppy. Had a bit of a trend on Monday. Actually had some pretty good gains on Monday. Black, I think, made, sorry, when I say black, I mean the MAP Black, our most diversified portfolio, a $100,000 portfolio, made about $3,400, $3,300 on Monday, but really just kind of chopped around. We'll look at that in a second. Really just kind of chopped around, and as you can see, you can certainly see why our portfolios have chopped around. You had this bull open, this bull gap rather, come down to finish it, and just couldn't follow through by the end of the session. Nevertheless, if you look at our proprietary indicators, you can see that throughout the most of the week here, Friday, Thursday, Wednesday, Tuesday, and Monday, look at this bullishness, extreme bullishness, quadruple threat bullishness, essentially right here. You have the quintuple coming in when you have the trend, when you factor in the trend, prices above the trend. We have all of our proprietary indicators suggesting that the market is likely to go higher, and the bulls are going to certainly be in control, and certainly that was the resolution by the end of the week with a close essentially at the high of the week, save this one errant move right here. We had this bullishness on yesterday, throughout yesterday's session, just in this single indicator, a bit of a divergence here and kind of some choppiness, but as you can see overall, looking at the bigger picture, certainly the market has just bided its time, and we certainly mentioned to our clients the good thing, the good news about these coiling sessions was that we were going to gear up for a big move in the market, which generally, as we've mentioned, 80 to 90% of our profits are made on 10 to 20% of the trading days. And of course, today and Monday were a couple of those days, but certainly today was one of the days as MAP Black gained about 8% and essentially saved the week. The portfolio finished up over 6% for the week, and of course, on an annualized basis, that's over 300% on an annualized basis return, which certainly is mouth-watering. Nevertheless, that's where the market is. The bulls are certainly in control as we switch over and take a look at the chart of the daily market. This is the S&P 500 cash market. As we look at that, what a beautiful chart that we have. Just really some great indications going on. Of course, on an official market timing basis, we did book our first loss in quite some time. As we went bearish at 1091.76, of course, methodologically speaking, I should say, we just follow our method. 1091.76 was the bearish call. Fortunately, for all of those, generally we like a market that goes higher, although we certainly participate on if the market goes up or down. Nevertheless, a beautiful chart. As you can see, we weren't quite hadn't quite abandoned in our official bearish state, and even though we had this beautiful test, as we mentioned, the lion's share and the mother of all key trend following support resistance measures was right here around 1040. The market, being the S&P, loves 1040s and 1080s. It came down right here to test the 1040 level in convergence, that horizontal level in convergence with this prior low, and the trend really just launched. Was a launching pad certainly for the market to gain 100 points just since touching that low. Nevertheless, following our method on a discretionary official market timing basis, we did hold our bearish structure based on this Fibonacci zone right here. We had some market resistance, as you can see, a little swing high right there, and came right back up to retest that high and kind of faked it out and weren't able to really break this fib zone of resistance. But nevertheless, you had the convergence of now supporting measures of both the short and intermediate term measures of trend following support resistance, which when they converge can be very powerful. And as you can see, they bent it right here, but certainly didn't break. Had the bullish tail reversal right there, and it was just off to the races. Nevertheless, we did hold to what we mentioned last week, and that was a move over 1120 would be the only thing that would bring us to a switch to bullishness. And of course, that's what we got on Tuesday. Following Monday's magnetic rise near there, but finally got the break Tuesday, went officially bullish at 1121 over 1120, and that's off to a quick 20 points in profit, so not looking too bad after today's session, and certainly being out of this congestion zone, we're really starting to get some market moves in the market, and it's looking particularly impressive given those moves. Nevertheless, don't really. Let's see if the nope. Still haven't had any exposure in our after booking that very impressive winner that we mentioned in the contrarian sentiment basis. Nevertheless, we're going to go ahead and let's look at this portfolio. Let's see where we are. Day trader 19 booking a nice gain today. 17 not trading. 16. These are some of our new methods. Unfortunately, getting stopped at right there. 15 not trading today. But what was interesting was 14 right out of the gate was the first system to go long. It essentially went long right at the market open, and so it was pretty impressive. It certainly called the whole of the move today, minimizing that beautiful trade in the Evo. Long-standing Evo has been around probably, I don't know, 4 years or something like that. Very been around for quite some time, and as you can see by the equity curve right there, you can see why it's one of our favorite systems. That's the Evo ER, which actually is TF right now, but there, as you can see, the Evo ES also going long at the open, 1128 to 1138. Catching beautiful moves. No trade right here in the ES Day Trader 1.0. Not really much to look at here. Here's our new Day Trader 26.0. Finally got some trades off. One winner, another winner. Unfortunately, didn't catch the move today. Our new swing system portfolio, SS 15.0. This is why it's so important to be diversified. 15 short, 14 short, 13 short, 12 long, 11.0 long. Look at the beautiful profits right here in 11.0 catching the YM's moves. Beautiful gain right there. Even a gain right there and going right back to the long side, catching a beautiful move right there. Swing system 10.0 long. So you have net completely hedged strategy there. Nevertheless, we're taking up too much time. We're going to go ahead and switch over and look at, there we are today. Matt Black up $7,600. MapDT version 4.0 HR, actually the standout, up 11% on the day. But we want to introduce you to something new that we're going to be offering, and that is the Dual Day Trader ES MSA. And what does that mean? Well, essentially, our portfolios are provided. The Dual Day Trader ES, for instance, trades one lot across two systems, so a total of two lots. Sorry, it trades two lots across two systems, essentially one lot per system. But we've never used any sort of compounding in our returns, so certainly looking always to improve, Kaizen. We started looking at how can we make our clients more money when the money is there to be made, and essentially that's optimizing through position sizing of the portfolio. So essentially what we're going to give you is the opportunity to leverage your portfolio. Essentially, if you start out with $5,000 and you've made a substantial amount of money, we're going to allow you to leverage and put more contracts to work essentially in the MSA. You can go to the home page. There it is right there on the home page. We put it right there. Essentially, now this is for purely informational purposes. As you can see, this portfolio right here, the Dual Day Trader ES MSA, has made through this optimal position sizing. That's, in other words, not standing with static returns, which is what we post on the website. That's essentially optimizing your portfolio on a daily basis. $131 million. Now, this is obviously purely for informational purposes. This is simply an example because there's almost nothing in real world about trading 5,000 contracts, which if you look at the bottom of the performance report, you can see the position is actually 5,000 contracts. Now, obviously, you're going to be limited to probably 100 or so is what we'll limit each client to. So if we can figure out a way to limit that, but as you can see, this is, again, for informational purposes. You can see you start off trading two contracts, one contract. As you make money, you start off with $4,000. We recommend $5,000. You can go to the website and check this out for yourself. But as you can see, the position sizes get larger. 2, 3, 4, 6, 7, 10. Just essentially when the portfolio is making money, it's leveraging higher. 21 contracts right there. And as you can see, the account can simply grow astronomically. In fact, the first couple of years when it goes to 20 million, you really can't even see it on the chart. If you have any questions about this, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. Hope you have enjoyed the video, and we'll see you next time.